Finance now, the ASX 200 finished the first day of the month on a bright note, up 0.3% despite some chaos in the energy sector. For more, I'm joined by Scott Phillips, Chief Investment Officer at Motley. Scott, good evening. A tough day for lithium-focused stocks.
Tomo, good evening. It certainly was really big falls for some of these companies. 19% for one, Pilbara. Another one down 22%. A really tough day. A couple of things. Look, this has been a really hot sector. And unfortunately, when the sectors are really, really hot, they can go very well. When that cools suddenly, you can see these big falls. Some concerns, research note out from Goldman Sachs today, suggesting lithium prices may well have peaked. Also some changes to the way Argentina is invoicing lithium. That combination really did scare investors today. We know electric vehicles are going to use plenty of lithium. Whether the price is right is the open question. And today, investors are deciding it wasn't necessarily the case. OK, now Origin Energy was also down, dropping a massive 13.7%. Yeah, investors hate uncertainty, and in this case, Origin withdrew previously issued profit guidance. Now, that is code for it's going to be lower than we thought. At least, certainly, that's the expectation of the market. As you say, that really big fall. Coal shortages and high coal prices are to blame. There's no certainty about what Origin will be able to get, what it will have to pay, and whether it can pass on those higher charges to customers. That's an ugly mix for the share price, and we saw that fall today. GDP figures were released today. The Australian economy grew 0.8% in the March quarter. This has raised some expectations ahead of the June cash rate rise. It has. This is the good and the bad news from strong GDP numbers, unfortunately, where we are in 2022. The great news was the economy grew faster than most had expected. 3.7% is the annualised GDP growth. These are really, really strong numbers. On the flip side, for an RBA that's already looking to keep inflation under control and wants to make sure the economy is strong enough to withstand it, that pretty much gives them some degree of certainty. So, look, if they're going to raise rates, we'd rather them do it in a strong economy rather than a weak one. But it does meaningfully increase the odds of a rate rise in June, almost certainly next week. If not, you can almost lock it in for July. It's always a balancing act. And, Scott, before we go, what are the US futures pointing to? We started in the green for the first day of our June. Their first day of June will also look like it might start in the green at least. Gains of about 0.4% on early trading in US futures. And with a bit of luck, we might get two in a row here tomorrow. Scott Phillips, thank you. Thanks, Tomo.